At Maverick Ag, our goal is to assist and educate primary producers on all forms of business risk management. My name is Evan Schout, and I'm a CPA and CABE certified insurance broker. I've made my career focused on all aspects of primary producer business, including accounting, finance, and farm income programs. Our primary goal when starting Maverick was to provide farms a place to go to discuss, analyze, and identify options surrounding the risks on each of their own individual operations. We have created the Risk Management series of videos to provide farms an introduction into risk management. 6 short presentations that focus on the programs and internal processes that farms can take to reduce the stress that comes with farming. We hope you enjoy the content, and if you have any further questions, please feel free to reach out to us. Thanks for watching. In episode 1 of the Risk Management series, we want to cover the risk management paradigm. These are the 3 distinct areas we review and analyze on every farm that we prepare a risk management plan for. In terms of the risk management paradigm, we start with financial risk. We do an extensive review of ratio analysis, including financial institution ratios, as well as internal ratios that we believe you should be hitting. Then we compare to benchmarking. We put your farm up against farms of a similar size or similar competitive nature to identify where you may be lacking. Cost of production. Do we know the true cost of production, which then identifies the amount of risk that we have each year? And percentage of revenue. Are your expense areas consistent based on percentage of revenue with other farms of your size? The second area of risk that we look at is operational risk. This may include human resources. Do we have a large enough team? Are our staff held accountable? Can we complete harvest and seeding in a timely manner? We look at equipment utilization. Do we have too much equipment? Do we have too new of equipment? Are we utilizing our equipment to its fullest? Move to corporate structure. Do we have a leadership team? Do we have management meetings? Do we have a corporate board of governors? And lastly, succession. Do we have a true strategic plan in place that includes multi-generational transfer? Then, once we've analyzed the first 2 areas of risk, we move on to insurance. We analyze your government programs, your private insurance opportunities. Can we stack these products and utilize them collaboratively? And we calculate the outcomes to determine what the worst case scenario for your farm is each and every year. So, level 1 under financial risks. Is working capital high enough to allow management the freedom to make decisions? Do we have the freedom to sell our grain when we want, not when we need? And can we buy crop inputs when they are at the lowest cost or best margin versus when we have to? Are cash earnings historically high enough to cover off debt obligations? Can we hit our debt service ratios with the bank? Can we afford to take on more financing if required? How leveraged is the farm in terms of operations, building, equipment, and land? Do we have enough security in all of these areas to sustain a bad year? Do we have room to grow? Where is the farm in terms of gross margin and cost of production to benchmarks? Are you competitive? Are we lagging behind in certain areas? And lastly, what is the strategic plan of the farm? Do we have a succession plan, a transition, a sale, or are we clearly in farming just for a return on investment? The second area of risks that we analyze are operational risks. Does the farm have appropriate labor in place to complete operations in a timely manner? What is the estimate of hours per acre or acres per human? Do we even calculate these benchmarks? What are the strategic timing goals for seeding and harvest? Do we have a window of 21 days, which is what our window is for seeding? Or do we have a window of 40 days for harvest, which again is what our window is? Does the farm have an equipment plan that includes utilization and optimization of current equipment? What are the benchmarks for acres, per drill, per sprayer, per combine? When we expand, do we follow these benchmarks? Is there a corporate structure or accountability on the farm? Are there job descriptions, hiring policies, career progression, or even self-management goals? And what is the transition or legacy plan for the farm? Do we have a multi-generational transfer, or is the farm just an investment for sale? Once we've analyzed those 2 areas, we then break down and go through insurance and risk transfer. So can the farm identify the worst case scenario in terms of both profit and cash flow? Does the farm have an amount of self-insurance that we are comfortable with? Not all farms want to insure to a profit. Many are okay with a certain level of loss. The issue is, does that loss match your current working capital and your debt service requirements with the bank? Is there a detailed risk management plan in place for gross margin? Do we utilize government programs? Do we utilize private insurance? Are we looking for multi-peril or single peril coverage? Do we use stacking? Do we use collaboration of the programs? And financial institution requirements and advantages. Do we actually talk to our lenders about our risk management plan? Does the current risk management plan fit the farm strategic plan? Are we in expansion mode? Are we in retrenchment mode? Are we looking for new opportunities, retirement, return on investment? All of these areas have an effect on the risk management plan that we put in place. Thank you for listening.